What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol VINE for fresh vine wine. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this is a brand new ticker to the channel here, so we're going to start with the daily roadmap as we always do, just coming in and pointing out the most obvious areas of support and resistance. Then we'll talk more nuance as we drill down to the 30-minute intraday time frame. This is roughly what I'm seeing. Again, it's very, very choppy, just based on the fact that this is a brand new SPAC, I do believe. Is it a SPAC or an IPO? Let's see. Nope, IPO. So this is in fact an initial public offering. I'm not sure if today is the first day it hit exchanges. There's nothing really in my live news tab. If you see something out there, let me know down below in the comments section that may justify why the price was moving today. However, let's take a look at that 30-minute now. Again, all of the volume really came in on today's session in the afternoon around 1 o'clock. So to me, we're going to disregard almost everything that happened prior to that in terms of significance as levels, right? So is this really a strong support? The only reason I would support that theory would be because of the intraday halt, which did cause an intraday gap, and that's where the gap would close around 508. Really, this 431, sure, it's kind of where the rally kicked off from, but it's not the strongest support, noting that the interactions from in here were on extremely light, extremely low volume. So in knowing that, it's just simply all about, one, the gap, does it close that intraday level here? So underneath 574 should start filling down towards 508. From there, sure, you can watch out for 431, but I would not use that as a potential entry point if it's retested. And then, the other thing would be, okay, the gap holds. Do we make a move back higher into 7? Not only is 7 coming from here, prior support, but look at how it was also support in that little period of consolidation before the pullback into the last 30 minutes. You can see 2 touches of support. So 7 is that significant upside. As of right now in the post market, we're kind of hovering right around 6, 590. So it's not like we're dramatically higher or lower based on what's happening right now. So again, stuck in this range, it's either underneath 574 for the gap fill, and as we know, we're probably not shorting this. Yep, no shares to short, obviously no options chain either. So you're not going to take advantage of downside. You're just not playing it long as it moves underneath 574. You would wait for some sort of reversal pattern if that was the case. So maybe some sort of double bottom off the gap fill, fine. Neckline break takes you back higher. That's one potential scenario. But again, it would need to be a pattern. You can't just go long based on the gap fill here, noting there's really no structure there, right? That's as simple as we can put it. We would need the structure to build out first. In terms of upside, if you do get the bounce here and we get to 7, any sort of higher low pullback, so let's say it does something like this, higher low, then boom, that's probably going to pan out as a 30-minute intraday bull flag. Could be a 15-minute flag, 5-minute flag, a lower time frame flag pattern. Look for the breaks to get you back into today's highs of day, closer to $7.85, $8 roughly, right? If you wanted to calculate those true wicks, I'm just splitting the difference between some of this action in the past here, closer to that $7.85. So those are my thoughts. Those are the numbers to be watching inside of Vine. As of right now, this pullback is fairly aggressive. I guess we can quickly look at it through the lens of Fibonacci before I send you on your way. Coming in from low all the way up to high, again, blasting through the 38.2, through the 50%, and closing right on the 61.8. That's, again, why we're really being careful underneath that level here, because as we know, if we close candles under the 61.8, it's, dramatically increasing the odds that you do get that 100% retracement. If that happens, I wouldn't be surprised if this continues its downward drift to the downside, of course. The other thing we should point out, and then I'll truly send you on your way, I promise this time, is that if the move is going to be higher, it needs to be supported by really solid volume coming in down below. It would need to be on par with at least 1.5, 2 million shares per 30-minute bar sustained to get me interested in the upside activity here. That's going to wrap up the video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.